All right, so welcome back, folks. This is David Lincoln. So the market decided it would switch from being concerned about China to being concerned about bonds this morning. If we look at a chart of the E-minis before the open today, they were all over the place overnight. I went to bed and was like, oh, looks like we're rallying a little bit. And then by the time I woke up, we had bounced around all over the place. So let's take a look. Here is overnight. The E-minis got all the way up here to 2888, and then got all the way back down around 9:30, down here 2824, and then we've continued to rally back throughout the day. We've kind of come around a little bit, and we've rallied till the Nasdaq was the first thing to go positive. Nasdaq went positive earlier in the day, and then eventually the Dow came around. Dow was down more than other stuff for a little while, and E-mini's positive now too, or the S&P positive. Really, the news was just with the 10-year bonds really. The bonds going down, and the market was spooked. We had this, what we thought was a turnaround yesterday, but then the sell-off. However, if we look at the chart for the last 5 days, we can see that the biggest down move was really yesterday, and we didn't get close to the lows of yesterday today. However, volatility just... this part right here that I'm going back and forth between is kind of like the area where we sold off before the open. We were in this midst of a big sell-off before the open, and volatility really cranked up. The VIX was up like 3 points at one point today. If we look at the VIX here, we can see it did get all the way up to 2370 today, even with it was a big rip up in the VIX. This was serious nervousness. And UVXY was up 3 points or more at one point. If we look at UVXY here, we can see the high right after the open, $38.31, $38, right? So our position short, we're short UVXY via put spread, and I'm probably over trading here, but I did take an opportunity to roll this one more time. And what I ended up doing is I bought the I traded we used to have a roll which was 2 weeks from now, the 23 August, we had the 35.30 put spread on 30 times. So the most I can make is $6,000 if UVXY is below 33 in 3 weeks time. What we did was we rolled that out to in 2 weeks time. What we did was we rolled that out to a month, and we went down to the 30.27 spread. And in this case, this roll I got for what I thought was a really good price, which was 10-cent credit. So this allows us the opportunity to make $8,000 if if UVXY gets back down to 27.5 in the next month, then we have the opportunity to make $8,000, as opposed to $6,000 in 2 weeks. It's $8,000 in a month, but it gives us more time for this to come true. But it also rolls the strikes down. Before we had the 35.33 strikes. Now we have the 30.27 spread on. And because I was able to do it for a credit, I was able to add a couple extra spreads on there too. So that was nice. So things are going in our favor right now with the VIX once again down on the day, but we do have that situation we were describing before, where as this starts to normalize, we've got the VIX down with UVXY up. That's because the futures and the spot are converging with one another. And if we look on our VIX Central chart, we can kind of maybe see that a little bit better. This is a rare time when the spot is above the futures, and actually it no longer is. Spot has passed through the first future, the front month future now, and is heading lower. And remember, when we're normalized, spot will actually be below all of the futures. So right now you can see, if I get out of the way once again, you can see how the front month future is just slightly higher than spot, and as we normalize, spot will come down below all the futures, but it's just passed through the first future now. So this is a good sign that we're beginning to normalize. Expect this trend to continue as long as we don't get a bigger sell-off here. We're still showing 2% backwardation, and this is still, we're still in a spike. Once the spot gets down below these futures, we'll be in a more normal situation. If we go to Twitter, I appreciate someone tweeting this at me. It says here, spot, it's from Tom McClellan, spot VIX index is above all of its futures contracts. Or saying it another way, all futures are below the index, which is pretty rare and a noteworthy event. But followers of the show know that that's the case, because I already described that to you yesterday on the show. So here we go. And thank you for your kind words on that tweet, Mr. Edward the Willing. Thank you very much. Okay, so as we normalize here, we should see that this reverse contango or backwardation, we can see that the second month future is lower than the first month future still, but as we normalize, we should see those come back into line. It would be a great kind of benchmark if we could get today, if we could have enough of a rally here or sustain enough of a upward move here so that VIX, so that we can get out of backwardation. If we could have both the front month and the second month future go out at the same price, or the front month future go out lower than the second month, that would really be a great thing for us today. As we look to the downside now in UVXY. If we look, it appears for now, I don't want to jump the gun too much here, but it appears that we may have reached the top of this particular spike in the VIX. We haven't come close to that 42 level in UVXY, and we haven't come close to that 24 level in the actual VIX spot. So there you go. Markets recovering today. We did have Disney, I guess earnings came out and were not so hot. I was listening to Kramer on MSNBC CNBC. I don't usually listen to those shows, but I was listening to Kramer on there a little bit today, and he didn't seem worried about the market at all. For me, I have to respect Jim Kramer because he's made a gazillion dollars in the market, certainly has made a lot more money than I have, but he's often is the kiss of death when he likes a stock. So, but he is interesting to listen to, and he didn't seem too concerned. What he was saying was, the markets, if the markets are so concerned, why is Apple only down like $1 or something a couple hours ago? And indeed, this particular down move in the market, it's like when you get a big down move and they say, and there seems to be a very clear reason for it, that's one thing. But this particular move in the market, I mean, it was kind of got launched by the president's tweet about tariffs, and it just seems that like something that gets launched by a tweet shouldn't have the staying power of weeks and weeks and weeks. And indeed, maybe everybody's going to just kind of calm down here a little bit, and this market can turn around and slowly nudge higher. As I was stating before, the actual volatility of the market was pretty high this morning. I mean, we saw these big moves before the open. It was rallying overnight, and then the huge sell-off in the middle of the night to early morning. And that is real volatility. That's what you call volatility, folks. That was a volatile market as we sold off overnight. Let's take a look here. I just kind of want to try to isolate this one more time here. But yes, you see this, we're rallying. Here's the close, okay? A little sell-off after the close. Then we get this low here of like 28.55 around in the E-minis. Then we get this big rally overnight, and then this huge downturn. Boom! It looked like the spike is over. We're just rallying back, and then boom, that huge down move, and that really jacked up the VIX. It took the VIX by a little bit of surprise. Now we've recovered from that move. You see VVIX is backed off. VVIX down 3 points at this point time. The VIX off of that 20 level down to 1966. Someone was asking me yesterday, well, since I tweeted the VIX is below 20, is 20 a significant level for me in the VIX? And no, there's nothing specific about 20 that's significant in my mind. And when people start talking about levels in like UVXY of what's significant, I find that even laughable, because UVXY, you have to think it's an average of two futures. So the price is not going to stay stagnant. And even the price staying stagnant, it almost means that there's volatility in the market, because UVXY in its natural state is always going to be edging lower. So there's not a spot that you want to back up the truck no matter what price it is, because it's always going to be evolving over time. It's something that's evaluated in time. And when you look at a price of UVXY, that's taking a snapshot of a process which is undergoing. Now, you could call the trading of any stock a process, but with UVXY being that it is based on two futures that are rebalanced every day, and the ratio of the futures changes every day, you have to understand that that's different than a regular stock, and it does not conform to traditional technical analysis. And try to beat you over the head with that, folks, but people still come on and give levels in VXX or UVXY of, oh, well, it needs to fill this gap. Now, I don't even believe in like filling gaps and stuff like that in regular stock. So I as far as in VXX and that sort of thing, that's just a bunch of nonsense. Most chart reading in VXX, UVXY to me is a bunch of nonsense. Now, of course, you need to know what the prices of these issues are, and you should know the chart in your head. It's not to say that I don't know what the chart of UVXY looks like, but saying that like, oh, okay, well, look, this gap here, oh, it has to refill that gap because, I don't know, is a bunch of nonsense. So when people start pulling out their charts and showing you a chart, now a chart of the VIX has some significance, right? It, the VIX kind of oscillates up and down, and 10 in the VIX this year is going to be pretty similar to 10 in the VIX next year. Not true with UVXY. If we back the chart out for the VIX, okay, you see it oscillates up and down, and maybe you could say, okay, well, if it gets down to 10 here, it looks like a buy, or if it's above like 24, it looks like a buy. But this is not based on a supply and demand. There's not, okay, well, there's sellers up here, they're definitely going to pick this point to sell the VIX. It's the VIX is a number that's based on a formula that evaluates different options in the SPX. So it's not a supply and demand thing. However, if you want to chart and do chart patterns with the VIX, I'm willing to let you have that. But when you start to go on to UVXY, that is basically like a chart does not take into account whether we're in contango or backwardation. It doesn't take into account the fact that this has beta drift and coming in and saying, oh, okay, well, I'm all in. If next time this gets to 20, I'm all in UVXY, is just silliness. Because if it gets to 20 tomorrow, which it's not going to, but if it gets to 20 tomorrow, yeah, that would be a good buy there. But if it gets to 20 in 6 months and it's been in contango for a long time before that, it's not a good buy. So it really depends where you are in time with UVXY. UVXY is like a living organism. It does not stand still, and it does not act like a stock. So please stop with the technical analysis on UVXY. Thank you. I'll get off my rant for now. So in the meantime, let's check our deltas. Some of you might have seen that BYND was down a lot yesterday. The reason for that was that they did announce details of a stock offering and concrete details, and that did bring the stock rapidly lower yesterday. It has recovered a little bit. I think it got down to about 161, something like that. Let's close up on the chart here. Oh, no, it got down to 155 that was early this morning. But it did recover a bit from there, back up to 166. It has held up pretty well, all things considered, over the last couple weeks. But look for continued pressure on this issue as more and more shares become available for insiders who were in lockup periods. Remember, that date we've been talking about is October 29th, I believe, when the lockout is over. However, people will be finding ways. Shorts will be kind of somehow getting into the market before then as people cover their shares in different ways. And now as we stand, VIX 1974, and currently VIX is still above all the futures. However, and we're in a situation now where as the VIX moves lower, as the futures move lower. VIX moves lower faster than the futures, but it's slowly catching up with them and will pass them at some point. But they're both moving. As we move down, they both move down. As stuff moves up, they both move up. So it can look like the VIX spot is about to catch the futures, but the futures are moving as well. So I would say we need to get the VIX back to, I would say, probably 18 before it's going to pass up all the futures. Because if you look out to the farthest out futures, they're trading around 18, and it needs to get through that level. Those will actually come down a little bit more. So maybe even 1750 before we are in a situation where this chart starts to right itself really, and spot is below all the futures. But, going in the right direction. It looks like the worst of the spike may be behind us now. And I know that there are some traders who do like to jump in after the spike and short stuff, maybe put a long-term short on that goes out to December or something now as this moves lower. And we'll see if that is the end of the turbulence for a little while or not. I'm sure there's more interesting stuff coming up real soon. Thanks for watching today, folks. As our P&L stands, pretty much the same as yesterday, but our overall situation, actually, it's down $200 from yesterday, it's showing, with UVXY up 97 cents. That kind of makes sense, right? Because our delta here, it shows short 264, so UVXY up almost $1. We lose $200. That makes sense. The delta short 263 means for every dollar up, you lose 263. For every dollar down, you make 263. So we're up just under $1. We lost $200. Makes sense. But positive news with the VIX down from where it was. We like to see that. We like to just be moving in the right direction because, remember, this is like a freight train. Once it starts moving in a direction, it often stays that way. So we'll see what happens. I would love for these markets to stay positive on the day, maybe move up a little bit more, and we can have the VIX move lower, which is what we're rooting for right now. All right, thanks for watching, folks, and best luck trading to you, and I will see you in the next one.